Right. This is the part two. I'll quickly dive into India and talk about my expectations that I have from the market this week. Uh, you know, it's not so easy as it looks. I'll tell you why. The chart tells me what? The chart tells me go long above 18,250. You go short below 18,000, 17,800. Nifty Bank tells you to go long, probably above 42,700, go short below this trend line 41,800. That's what the chart tells you. But the important question is, how do you want to play it? Because we are headed into a fragmented week. Thursday is a holiday on account of Republic Day. We got just 3 days. And moreover, this is totally fine. But moreover, the next week as well, I would like to take it as a fragmented week because Wednesday could be a complete change of direction to what we probably will see in the next week. So this week, let's say we get a breakout, or this week we get a breakdown. Wednesday could completely change the picture because of the reasons I've discussed in my last video. So if anyone's watching this for the first time, I've just uploaded a video on my market talk on US markets just a couple of minutes back. So just watch that and then come back to this video. I'll try to give you as much detailing as I have. I do have some fine points that you can add. We were just having a discussion with our team at TFA, and we found a couple of important points. I'll start with my PNF chart, something I've always fallen back upon. So whenever I'm confused in the market, I play on the bigger chart. So for example, number one, I would not suggest you all to go sideways now. I will be cutting my short straddle on Bank Nifty tomorrow or day after maximum, but I do not suggest anyone now to go into a sideways trade. We've seen about 3 weeks or 2 weeks of contraction. I'll just show you the sector charts. They have contracted to record levels, and we are going to see a trend. The only question is, do we play it for the short term or the long term, medium term, whatever it is? So I'll try to answer these questions in this video. So right now you've seen that if you are logging in on a smaller chart, you're stuck in volatility, you're stuck in congestion, and you're getting whipped out and stopped out. So whenever I'm in such kind of scenarios, I go on a big chart, which is the biggest chart for me is the point and figure chart. It eliminates time. It's just about trading the significant price movements, if I can put it that way. The point and figure chart trend lines, as you guys know it, is not a random trend line. It's a trend line of trend line. So support on point and figure chart is support of support. These are big levels. 17,800 now is the big support. If we start to go below 17,800, that will mean a breakdown on a point and figure chart. And fortunately, this is what our chart tells me. So if you ask me on a very small kind of a scale, if you're like trading very, very intraday, or if you're scalping it out, then of course we are not doing well below 18,000. I totally agree with you. And I talked about this on Telegram as well. So if you aren't on my Telegram, links in the bio, just click and join. Everything's for free, don't worry. But I talked about one concept. I think I need to brush it up. There is record contraction happening everywhere. If you look at the small caps, for example, just see how the Bollinger Bands are contracting. I put the Bollinger Band bandwidth on the bottom column, and this basically tells you how much of a contraction are you seeing. And values close to zero means that you're really contracting. And just look how much we have contracted. Look at the past 1 year. Look how much. So this is the biggest contraction I've seen, I think, almost in a year. Look at what mid caps are doing. If I can just put CNX mid cap, I just want to show you how much they have contracted. It literally is 0.03, 0.02, and we haven't seen these values all the way since August 2021. That's about 6-7 months away. And whenever these record contractions happen, whenever the squeeze happens, you get a big move. So the trigger I put is that whenever I get a daily closing, it's a daily chart. So whenever I get a daily closing above or below, that is where I know I have to, follow that trend. And that's what I would like to consider a breakout. So the filter I put here is a daily closing. So coming back to Nifty, I'll talk about all these things as and when I very slowly. I hope everything is clear and I don't want to brush things up faster. But coming back to the topic, is 17,800 is a big support. Even if you are short, right? Let's say you're short right now, and right now the markets SGX Nifty tells us that we are opening 80 points gap up. I don't know what the number will be tomorrow. ICICI Bank earnings are going to get discounted tomorrow. Reliance earnings, JSW Steel, Kotak Bank. It's a mixed bag. The banks have done well. Reliance not so well. It's a mixed number for that. JSW's gone down. So it's maybe we see some sectoral play tomorrow. But depending on where we open, let us say we're opening gap up, the shorts again get trapped. And the reason I say that is because we saw a lot of call writing on Friday, especially at 18,100 level. And if we again go back above that level, it's again that, markets moving in a range, trapping up and down people. But coming to the topic, even if you're short right now, I would say that even if the market does come down, 17,800 is the place where you need to exit your shorts for once and then revisit the view, depending whether 17,800 breaks or it doesn't break, because that is my point and figure chart level. Please treat it as important. Forgetting the point and figure chart for a while, you got a good resistance trend line coming in on Nifty. Hope you can put it up on your charts. It's a good trend line which shows that unless until we go back above 18,150, 200 levels, we aren't turning bullish. So I'm in wait and watch. This entire month I've played sideways. I played long on IT. I played sideways on the Bank Nifty, and I do not want to be early. I know big moves coming. It's around the corner, whether it's the budget that's going to trigger it, whether it's the monthly expiry, whatever it is. I'll give you the scenarios, but I just do not want to be early. I want to be maybe late, but in the right direction, so that even if I can't capture 80% of that move, I want to capture 50% of the move. So better late than sorry. Putting it in very simple terms, I don't want to be long on Nifty as long as I'm below 18,150, 18,200. I really don't want to be, long on Nifty below these levels. Once the market starts to go above, and I would say if I get a daily closing back above 18,150, or if markets can start to travel above 18,250, which is a big number even on the point and figure charts, I think that's the time where we need to build our long exposure and start to play on the upside. So the range that I'm looking at is, of course, 18,250 to 17,800. I'm looking for an expansion of the range. Whenever I get it, I'm going to play it for a little bit. And right now, I would say play it out intraday as much as you can. Let's take a hint from this trend line. This trend line for tomorrow, you can see, comes around 18,120, 150 levels. Below these numbers, I'm not going to be bullish. Above these numbers, I'm not going to be bearish. So if you're still confused, just wait it out. Give it a couple of days. You're going to get an expansion either below 17.8 or above 18,250. Just try to play when that happens, so you're safe. If we come back to Nifty Bank, one thing, if you observe the Nifty Bank, the Nifty Spot and Nifty Future, Nifty Bank and Nifty Bank Future premiums, so the differences between spot and the future has come down quite significantly. So that shows me something major is about to happen. But Nifty Bank is almost the same. It's moving in a sideways trajectory. It's more of a symmetrical triangle. Anything could happen. We're not going to predict this time. Of course, not going to predict this time. 42,800, that's the 700, 800, that's the big level for me. If I can, let's talk about intraday for a little bit. I want a closing. If I am looking for a bigger chart, a bigger time frame, I want a daily closing above that. That's my filter. But if, for example, tomorrow markets start to go above that, I'm not going to trade immediately on the break of that high of 42,700 plus, but I would use a time filter. So for example, I would want markets to sustain above that level, maybe for 1 hour, 30 minutes, depending on how risk averse or risk aggressive you are. So if markets start to hold, sustain that level on a good time basis, then I would say we are heading towards this resistance trend line. And a bigger movement happens once this trend line breaks. So I think that comes around 43,100 levels. Just if I can correlate everything that we're facing, if S&P 500, we talked about that in my last video, I'll just quickly brush up those levels with you. If you want to become bullish for the medium term, take a trending trade for, let us say a couple of weeks to maybe a month or 2 months. That is only going to happen for me when market S&P 500 goes above 4,100, Russell goes above 19,905, and Nasdaq was above 12,100. If I can get these three numbers broken, that tells me America is stable. And if that can happen, maybe the next week, I'll be really grateful for. The reason is, if it happens right now, right? The budget in India, for example, and the FOMC could literally spoil it, right? So if we can delay this, and if this can happen on the FOMC or after the FOMC, then we know that we have nothing major to look forward to, and the news-based sentiment, fundamental trading is over. We can just use the technicals and follow the direction. So I've given you the levels. I'm also giving you the mindset, psychology, and bias behind it. The same reason, actually, I want to use it for India as well. If all those three levels are broken in America, India also needs to start to break 18,250. That will be a good technical breakout. Bank Nifty's got to start to trade above 43,000. This is something I'm looking for if I want to become bullish in the medium term, sell puts on a monthly basis and just wait it out. But again, if it happens, the problem I have right now. So I told you, I can just offer you the levels on the chart. So below 41.8, we're not doing well. Above 42.8, we're doing perfectly well. Above 43, 100, we're doing extremely well. So I have given you the levels. The problem is not that. It's easy. But the problem is, how do you write it? If it happens right now, do you again start to plan a reversal heading into the budget, heading into the FOMC? Those are the big question marks. So this video that I'm making, I would say, is a short-term view. I'm going to again come back on Thursday, or maybe end of the week. Let's say Saturday, Sunday. Let's come at the end of the week, because I really want to observe, are we holding above levels? Are we remaining in the range? But I have one more thing to add to you guys in this week, in this video. It is that, let's say tomorrow we're opening gap up. The first question is, do we sustain that gap up? We've seen in the past, gap ups happen, they don't sustain, they get sold into, and generally Monday gap ups are not to be trusted, right? So again, if Monday gap up happens, we start to again, I'll give you some scenarios, just out of my top of my head. Let us say tomorrow markets, open gap up, that they again get sold into. So that tells me that it's again going to be sideways. Let's say again market tomorrow breaks out, doesn't hold, again goes below that breakout bar. So all those things tell me that the breakout is not going to happen. Now, here's a very interesting play that you might want to look at if you're in India right now. If the breakout happens tomorrow, right? It could, right? ICICI Bank, Kotak, HDFC is doing very well in the last couple of days. If the breakout happens tomorrow, then maybe the monthly expiry wouldn't do anything, right? Because everything happens tomorrow, and anyone who wanted to be trapped has already got trapped. And on the monthly expiry, if you're following me for the last couple of years, I always tell you this before the monthly expiry. The monthly expiry in the last 1 hour gives you a chance to do hero zero. It's been, go back test this last couple of months. It's been very, I would say, fortunate enough to the hero zero people. Even if anyone's doing a long straddle, or forget a long straddle, if anyone has been doing a long strangle, selling OTM calls and buying OTM calls and puts for 20 bucks of Bank Nifty, even those 20 bucks are over 200, 300 bucks. I remember one day 20 went to 500 plus. So these movements have been happening on monthly expiry. Now, the only question I have is, if this happens tomorrow, if the breakout happens tomorrow, then there are not many people left to be trapped till the monthly expiry or till the Fin Nifty expiry. So then the expiries might not become so interesting. So what I'm trying to say is, on the monthly expiry, last 1 hour, we see offloading of positions. And that is what leads to that hero zero trade. If you're lucky, hero zero means either you make big money, or you make or your trade goes to zero. Now, the interesting part is, on these monthly expiry offloading, generally what happens is, this is observation of one of our team members, Suchit, and he's observed that whenever we're heading into the last couple of hours of of the expiry, whenever there is huge open interest at a particular site, those people generally get trapped. I'll give you a very simple example. Again, these are just educational ideas. Think about it, observe it. You don't have to trade generally. Let us say markets don't break 42,800, right? Or let us say markets are holding this level. You see massive call writing by the expiry at 43,000 call option. That tells you everyone sold calls. No one expects the market to go higher. Now the question is, on the monthly expiry, what could happen is, and markets have given record contraction. I haven't seen Bank Nifty contract for the last 2 weeks, and literally the straddle I took, I haven't even adjusted even once in the last 3 weeks, 2 weeks, whatever it is. So my sense is that this could be a trending monthly expiry. Number one, even if it is not trending, I'm probably expecting that monthly expiry offloading trade, a hero zero trade. The question is which direction. My answer is whichever direction most people get trapped. If markets are seeing maximum call writing at 43,000, then maybe that's the option to buy, because that is the level that market, if it breaks, most people get trapped. If market sees lower markets start to come down, you see maximum put writing at 42,000, and everyone sold puts expecting the market to be higher. Probably that could be the level that could break and give you a hero zero trade on the downside. So my suggestion is observe the open interest chart. Right now is not the right time. Come back on Monday evening, come back on Tuesday trading, Wednesday, most importantly, what happens on the Wednesday expiry. So for example, you can see right now, just an example, okay, you can see right now 18,100 as the highest call writing. So if that is the case on the monthly expiry in the last 1 2 hours, maybe you got to buy the 18,100 call and give it your luck. Hero zero is always, remember, hero zero means, the logic I use is, it's like going for a dinner. If that dinner goes waste, if I don't like it, fine, I'm not going to regret it. So think about उतना ही पैसा लगाओ जितना हारोगे तो फर्क नहीं पड़ेगा, stuff like that. So let's say Bank Nifty, we saw massive call writing at 42.5, even 43,000. So if this level, let's say, becomes huge, that could be a call option to buy. OTM could cost 20 30 bucks, maybe could give you big returns. But again, I want to look at where is the highest open interest. I'll come back on Telegram. That's why I'm saying come to my Telegram. I'll give you that live commentary if we have to take that risk or not. So these are my ideas. So again, the question is, even if these movements happen, do I play it short term? Do I expect another reversal by the end of the month after the event or not? So I know I'm leaving you in a lot of questions, and the reason is because I don't want to give you false hopes. I want to give you reality. And if I can just open quickly the sectoral charts, you will be able to observe why I am so confused right now is because of this. Just look at, let's say, small caps. Look at how much contractions that you've done. Look at mid caps, how much contractions that you've done. Look at energy, if contracted. The Bollinger Band is squeezing. And whenever the Bollinger Band is squeezing, a movement is coming. So what I have done, what I advised you on Telegram also on Friday, mark the highs and lows of Bollinger Bands, put your triggers, wait for daily closings above or below those levels so that you know which direction you have to go in. I'll give you an example. Let's say PSU Bank, you can see massive contraction. I've marked my levels of 4371, 4165. Any day the market gives me a closing below or above these levels, I know I got to play in that direction, provided that sector is hot and in focus, etc. So I hope you've got an idea. Any sector that you look at, let's say, look at Nifty Metal, it's gone. You can look at that sharp turn in the Bollinger Bands, showing you how much they've contracted. So generally, end of Jan, you get a trade. Look at the charts of January, the last 1 week, 10 days, give you some kind of a movement. So hopefully we will get that action back, that interest back into India. One thing which I find very weird is the VIX is still at 13.7. We are just 7 to 8, 10 days, 10 trading days maybe into the budget, into FOMC, and the VIX is still down. So I will not be surprised if going forward, near the monthly expiry, our VIX starts to go higher. So this is why I'm saying don't do a short straddle or something, because right till today, VIX was going down. It could again start to expand because we're heading into an event. And again, after the event, VIX can again collapse. So these things are to be noted by. So if you're an option seller, again, if you're an option buyer, you are getting low premiums right now. And if VIX expands, premium can blast. If you're an option seller, you are already, on thin ice. And if VIX starts to go higher, then you're not going to make too much money on sideways trade. So all these small nuggets, need to be remembered by you. So can I give you a final concluding advice? Hopefully you haven't got too confused, but sometimes we aren't too clear of how to expect things or not. So till today's closing, okay, till Friday's closing, I did have some kind of a beer bias on Nifty because we're below 18,250, we're below the 20 MA. All these things matter. But again, looking at where we're opening 80-point gap up, all these guys again get trapped. So better not to get trapped every single day. If you're trading intraday, have those scalps, but mark this bigger range, 18,250 and 17,800. We need to expand out of this range, and that's going to give us a 400 to 500 point move any which way. And same thing on Bank Nifty, 41,800, 42,800. We got to look for an expansion out of this range. If you're in the range, scalp it out. Don't use your brains too much. Don't try to predict which way the markets can go. I think, and if the markets start to go below 42,000, that's an indication that they are weak. But 41,800 becomes a level. 17,800, a big support on the point and figure chart. So you got to keep that in mind. VIX could start to expand. Also keep that in mind. But that's all from my end. Time filters, daily closing filters have got to be put in. Everyone knows at this point of time the markets can expand, right? So it could still take 7 more days. It could take the day of the budget to expand. So this is why I'm saying, if you're a sectoral guy, if you buy stocks, if you sell stocks, put your on those Bollinger Band daily charts, upper Bollinger, lower band, put your daily closing filters. You got to have daily closings above or below to take that directional trade. If you're not a positional guy or something, if you want to trade some intraday breakouts, you got to put time filter. For example, Bank Nifty, maybe 30 minutes, maybe 1 hour, trading above 42,800. That could be a trigger. But just be careful. We might see a little bit turbulence ahead in the next couple of days. But then I personally believe by the end of the month, the view will be clear of what we need to do. So just wait it out a little bit, just a little more time, a little more turbulence left. Then we'll have a clear path of a good trending market. And we just have to catch the trend, just sit on it, not do anything, and watch our PNL fluctuate into just good numbers. So that's all from my end. That's all from my end. Personally, if you ask me, if I'll personally try to take that monthly expiry trade. I'll talk more about that on my Telegram on Wednesday or Tuesday evening, depending on where we are closing, what's the open interest numbers like, and uh, if I take any option selling trades or option buying trades, I'll take it for this week expiry, and I will try to make the view again on Friday. Thursday is a holiday. I don't want to carry anything over. It's a Republic Day. Enjoy the holiday. My suggestion to all of you will be, if you're in any kind of trades weekly, बंद कर देना, कुछ नहीं होता. Next week दोबारा trading लेंगे. We might trade Friday, Monday, 1-2 days we will trade, and then we'll observe for what expectations we have from budget and FOMC. And after that, you will just have a clear path of where you're headed. Thank you so much, guys, for watching. Long videos today, to a 1 hour combined both videos, and I'll see you next week.